Hello, everyone. Welcome back to Messari Happy Hour, Episode 4. As always, we're going to start off with a quick disclaimer. All opinions expressed by our hosts and our guests are merely their own opinions. They do not reflect any endorsements or opinions of their companies. This discussion is meant for informational purposes only. You should not take their opinions as investment advice, as you will be solely responsible for your own investment. Hosts and guests may hold cryptocurrencies discussed in this Twitter Spaces. Additionally, certain Messari employees are required to disclose their holdings, which is updated monthly and available at our website. I will share the tweet that has our disclosures as we start this discussion. Web3, PFPs, GameFi. We're going to kick it off with a discussion on the PFP ecosystem. Are there any events or communities or mints that anyone in this space has been tracking? What's the general sentiment currently in the NFT PFP ecosystem?
Yeah, thanks, Doug. I can kick this off. Hi, everybody. My name is Justin. This is my first space with Messari. I am on the research team, and I actually joined pretty recently, too. So this is going to be really exciting for me just participate in this space. And a project that I've been keeping track of has definitely been Artifact. Just to give a brief little summary about it, they were a design company focused on gaming before they got into NFTs, and then they switched over at early last year, 2021, with some collabs with Fuwochus, which is a native crypto artist. They collabed with a fashion artist named Jeff Staple, who he's like a pioneer in the sneaker area from the mid 2000s. And essentially, they have been able to create this crazy unique ecosystem with their own pods, which is like your own digital room where you can customize it. You can add paintings and other NFTs that other people can then view this room. They can interact with it. They can buy those NFTs that you have in your room if they wanted to, and if you wanted to sell them. And a second little tidbit about that is that Nike acquired them as well in December. And as you can imagine, Nike owns, of course, its own brand, Jordan, Converse, and now Artifact. So now that fourth brand, it's being held into that same regard as the others. And I believe with that kind of Nike backing, and I'm sure we'll get into this later about comparing VCs and just other kind of other company involvement as well. That I feel like that backing is something that will be very interesting moving forward, and we could go more into it in depth later on. But definitely piquing my interest in seeing how Nike can kind of push that funding and push that project further.
I've got a question for you, Justin. Is there anything specifically, because I think we're going to get to a point here where we talk about these projects that are popping up, whether it's a simple PFP or a project like Artifact. Are there items on the upcoming roadmap that have you intrigued? Is it simply the connections that they have with a power like Nike? What value or what utility has drawn you to this ecosystem specifically, is keeping you in it? And do you think that at its current value, will these items on this roadmap continue to keep it at a certain point, or as things come to an end and they run out of roadmap items, will it hit a stasis of some point, or a true value?
Definitely, excellent question, and I'll focus on the first half about like what makes me want to participate in this community still and hold on to their NFTs. One example is that they are really focusing on connecting physical fashion with digital fashion. And what I mean by that is that your PFP, your avatar, it's called a clone. Let's say it has this really cool puffer jacket, or maybe it has a cool chain on it, or maybe a nice hat. What they've alluded to is that you'll be able to forge those items in foraging, as in you'll be able to manufacture them into the real world, and you'll be able to have it shipped to you for free and all that. And if you think about it, again, now this is turning into that whole sneaker fashion culture with all the resellers, and that's pretty sure it's $1 billion industry in itself. You're reselling sneakers, and you have all those secondary markets. If your clone, right, if it has a jacket where there's only 20 other clones with that jacket, and you own the physical one, that's going to have its own tangible value too. Whether you want to resell it, or maybe you just want to hold it on for clout purposes, which some people would like to do that. I think that is a very unique thing where Nike has the manufacturing power to forge and create those items on a mass scale. This isn't some print on demand thing where you go into your local manufacturer. You really have arguably the biggest, one of the biggest clothing companies that are backing this process. And can you repeat the second part of the process? Oh, it was sort of the question. It was for when the roadmap ends.
Yeah, the second part of the question is that for not just Artifact, but most of these projects, whether they have a roadmap to start or something that's applied after it's gained some traction, when those roadmap items end, and let's assume this project is at peak value, bluntly, what is the point of holding the project, and does it continue to retain value, or has the value been extracted already and people move on to the next item?
Yeah,
or the next project?
That's a really interesting question. Definitely, yeah, that's a really interesting question, and very important one, right? You don't want, I feel that as a project, you don't want to come to the end of the roadmap and say, okay, what do we do now, or what now? And in general, right, if a project were to come to the end of the roadmap, then I would expect to see that project's value to come down, and just the value would just be based on how cool it looks, or maybe just on the community, how much the community values it. But if there's no more utility coming out, then it'll definitely be a sticky situation. And on the other side of that, I believe that Bake, they did it on the safe side of things, right? They were working towards 2 roadmaps. They finished the first one, they came out with the second one, and then they got VCs involved to kind of give them some extra leg room and provide them with greater potential to create something that will last longer, right? You're going to have, if their ecosystem, their metaverse plays out, then perhaps they don't need to keep creating new roadmaps every 6 months or every 4 months, or whatever it was last year, right? They can kind of just have this ecosystem run on its own, maybe through, I don't know, maybe through some sort of MMO type of game going on. I'm not sure exactly how it's going to play out, but that's just what I'm speculating. And the users, the people that are interacting with this, can kind of just get some sort of utility, get some sort of fun from it on its own, without the team having to create something new every 2 to 3 months.
Yeah, Justin, so going back to when you were discussing the sort of utility of like the digital fashion along with the physical fashion, so just a question that came to mind for me in terms of, valuing the NFT, and also trying to figure out like how this digital to physical like bridge is built. Like, what happens if there's a user, say, who owns the digital version of this, like you were saying, the example I think was like a jacket, for example. And so then they get the physical item, and then they choose to sell one or the other. So then they only own, like, let's say they sell the physical jacket to somebody else, and then, at some point they want to get out of the project, so they also sell the NFT. Does that create some sort of like tension behind what they're trying to build in this like real world to digital world connection? Because now you have like now you have one person who owns the physical item and a totally different person who owns the digital item. So do they like lose their connection value wise, or how does that relationship play out, you think?
Yeah, I totally see what you're saying. I personally do not think it'll create that much of an issue. You kind of see it with even just with basic Bored Ape Yacht Club merchandise, right? Someone might keep holding onto the merchandise. They may keep wearing the shirts, the jackets, the hats, but maybe they sold their ape 5-6 months ago. But they still feel a part of that community. They still feel proud to wear it, or they just like it. What I've seen is that hasn't really been an issue internally, right? No one is saying, "Hey, you don't have your Bored Ape anymore. Stop wearing the hat. Take the hat off." Anything like that. I think that's not what Web3 is about, as far as my understanding. So I'm not too concerned about the physical selling and the digital being held by someone else or anything like that.
I think with that framing, I've got a question for the group as a whole. This is me playing devil's advocate. I don't know if every project that is dropping right now has quite the roadmap that an artifact has, specifically when you talk about your basic PFP. What do we think the general health is of the NFT PFP space? Is it something that can continue like we saw back in summer and fall, where every single project, no matter who was behind it or what was on the roadmap, was successful, at least to the point that someone could hold it for a little bit and possibly flip it? Or is that framework dead and we've moved to a point where you have to have a legitimate roadmap or some form of utility, or enough backing in the case of like a Yuga Labs project to have staying power? I know that was like half statement, half question, but in short, do we think the general health of the PFP community currently is something that's sustainable as is right now, or have we finally reached a point where it has to develop just past the basic PFP, someone launching a PFP and that's it?
I think right now, just kind of given the overall macro health, a lot of the NFT community has kind of gone risk off. And that's why we see this new free mint meta going on with the goblins. Disclaimer, I do own one. But yeah, with this new free mint meta, it enables the community to, still have upside with these projects, but you're not having this high investment cost of, buying one of the more top tier blue chip ones like a Artifact or a Bored Ape. But overall, I think going forward, these projects that are able to still show these people value and develop a community, such as the goblins, I mean, there's a lot of value in building a community and building like a cult-like following, and developing that relationship between the team and having that trust, whether it's through offering value via merch or the roadmap, or whether it's showing technical excellence, such as goblins, where the community has gone into the code and the team has really showed that they put a lot of work into the code that went into this project.
Are we worried with this new free mint meta, quote unquote, that there's going to be spawns of the same type of project? I myself being someone that dove into hobgoblins after the Goblin project, do you think people will pay attention to some of the tells that may present themselves as far as it being a flourishing community or not? What maybe a better question is, what are you looking for exactly? And do we think that because of the success of something like Goblins, which may or may not be hard to track, and I'll let you answer that, Justin, royalties coming into play? Like, will we see these free mints with ridiculous royalties, and it just turn into another situation that kind of dilutes the value of the PFP ecosystem as a whole, and people just come in, they grab their royalties, they leave? Maybe the question is, what has drawn you to Goblins outside of just the quote unquote community?
So in terms of Goblins, I mean, as I said, the team has shown that they actually put in effort into the project. And I mean, I think that's just something that applies to the whole crypto NFT ecosystem in general. If you back a team that, you know, is putting in the work, is making the right plays time after time, and is kind of, you know, giving you a resume and something to believe in the project, that really helps to grow that community, that cult-like following that we've seen with a lot of the successful projects. I mean, a part of the reason that these Goblins have grown so strong is their presence on Twitter. They have these spaces where they're making the weird goblin noises. They're always active in the Discord. And those are just good signs that these people are actually in the project for something that they believe in outside of just, you know, number go up type of thing. Whereas, you know, if you go into another project's Discord and you see in there the talk is just, oh, what's the floor price, all that type of thing, that's, you know, less of an actual community and more of something where people are solely getting into the project just to flip a profit.
I think that's the part that I struggle with is community enough, is having a Discord where there's interaction enough. These are not, to me, not things that are truly quantifiable, not true value. And I think that kind of speaks, again, anecdotally, to the health of ETH PFPs specifically. And I know Andrew has a little bit of insight on Solana's side. Socrypt, do you have a question for us?
Yeah, quick question for Mr. Baba. So yeah, I guess that's like my question is basically piggybacking off of what Doug's asking. You know, is community enough? Like I personally remember back in like the ICO phase where there was a lot of putting the horse in front of the carriage, or putting the carriage in front of the horse type projects coming out. And I feel like we're seeing a lot of that with NFTs, right? We're seeing a lot of you know, cool PFP projects coming out, and then them coming out with the roadmap stating it's going to be available in the metaverse, and you'll have your own avatar, and it'll be in movies, and it'll be in TV shows, and you know, so all these like promises, right? So do you think that, I guess again, that is community enough? Is making, you know, weird sounds on a on a Twitter Spaces enough for now, or is there a lot of you know, rushing into this metaverse GameFi and PFP culture coming? Like you know, is it moving too fast where we might not see something of value, quote unquote, let's say, come out of these projects in 2 years, but we might see something come out in 10 years. So I was wondering what you thought about that and what that looks like.
So I don't think community alone is enough for a project to have lasting power, but I think community is a major factor in terms of, you know, getting that adoption within the space, getting the word out there, and just kind of having it have that recognition within the space that it has that strong community. But the team still does have to deliver, show some competence and that sort of thing. But in terms of, you know, the staying power over a 2 to 10 year horizon, I think a big part of that is just going to depend on how people view these NFT PFPs. Because I think, based on the prices that some of these are going for, you could argue that they're way overvalued compared to the actual utility that they give. But if you look at, some of the top tier ones, like a CryptoPunk, if you look at that more as something as like a luxury good and a status symbol, then, the price of this, it could have a ton of upside. But the utility obviously isn't there.
Go ahead, Cole.
Yeah, I think kind of following up with that about community is, while all of us are pretty deep in the crypto space and the NFT space, more of a mainstream picture is it's still very early for the average person that is just now getting into crypto. So I think there is still that runway for community to let projects stay afloat or thrive, just based off of the sheer amount of people that are yet to come into our industry. And then, I mean, that kind of flows into kind of like Andrew talking about the Solana NFTs and going along with floor prices and entry prices like that, and how, like I said, the mainstream adoption, it then flows into our industry.
Yeah, I can follow up on that. So one of the things that has been kind of fun to watch over the last month is we've hit the point in crypto where once again everybody starts declaring that it's dead, right? Markets had a rough 6 months, and all of a sudden you see the Wall Street Journal and the New York Times putting out the articles that, oh, crypto's dead, like it's over, like, this is all just vaporware. And if you've been around, then you've seen these before. One of the things to me, though, that's been super intriguing is, total disclaimer, I'm a pretty active trader in the Solana NFT ecosystem. I hold a variety of projects. But so I just because I was curious, I went back and looked up some of the stats on Solana's biggest NFT marketplace, which is Magic Eden. And just for sort of some rough comparisons, wanted to compare that to Ethereum and OpenSea. And what I found was really interesting. So Magic Eden has a total volume on the platform of about 18.5 million SOL, which, for simplicity's sake, that's about $750 million at current SOL prices. But what's really interesting about this is, so 4.68 million of that SOL that's moved around the platform has been the last 30 days. So that's a fourth of Magic Eden's total volume has been in the last month. So while, there's been all this sort of FUD about crypto's dying, like everybody's leaving and nobody's interested in this anymore, at least in the Solana NFT world, it's actually been the opposite. Usage has upticked. There's been more people who've been coming in and are trading, and, it's actually kind of thriving as an ecosystem. As to explain why, I think my guess is as good as anybody else's, but there are a few things that stick out to me as possibilities. So number one is just unit bias. So one SOL is just significantly cheaper than one ETH, right? I think ETH is trading around 1,800 to 2,000 right now. One SOL is about $40. So it's just a bit easier for anybody who's interested in dipping their toes in this sort of NFT world to, venture onto Solana, and, you can buy a couple SOL, buy a few projects for 0.5 SOL or whatever. And then on the other side of it, I think there's a psychological effect of it's easier to book, a 2, 3, 4, 5 SOL profit on a trade than it is to book a 2, 3, 4, 5 ETH profit on a trade. And so that's a sort of a positive feedback loop. You feel good if you do good trade and you watch your SOL balance go up. And so I think there's sort of a dopamine hit there that people like. I mean, I could say it's, it's kind of fun. It is kind of a game. The other thing that sticks out to me is I think because of Solana's lower barrier to entry cost wise, the space just iterates much, much quicker than Ethereum does. I like to think about NFT trading as you're constantly trying to learn what the current meta is. And so there's kind of a game within the game of trading. And recently on Solana, it's been these sort of just no roadmap, really, just community-based projects. There was one that minted yesterday that was pretty hyped called Just Ape. And I personally, I thought actually art was pretty solid, and they did a very good job of hyping the project. I think after mint, it had immediately 3x'd the mint price or something like that. But like that meta, there's been a bunch of other projects that have kind of like popped up, essentially copying their sort of like game, and it goes back to like OK Bears and like a few other ones, but like that meta will probably be gone in like a couple weeks, and there'll be a new thing that pops up in Solana NFT eco. And so with that, I think people, like, because of this sort of quick iteration, like people feel like there's more ability to kind of like hop on the newest trend and be profitable. Whereas like I think in ETH, there's just a higher barrier to entry, and like it's just, I don't know, it's like it's almost like a totally different culture.
I think you made a solid point there, Andrew, of kind of quantifying what is making these projects hyped or not from the human element, and what has made it easier for people in the Solana ecosystem, like you said, with lower barriers to entry and maybe a little bit less risk. Trying to get back to the utility perspective, and I think a space that ultimately the group thinks could be important in the future. Let's roll into GameFi and kind of talk about the current game of that space. I think we've all come to the consensus that GameFi could be a really strong tool to onboard people into the crypto space, teach them things about DeFi that maybe if presented to them in kind of the typical fashion would be a little bit confusing or maybe a little bit daunting. So let's jump in and talk the bull bear case for GameFi as it stands today.
Yeah, I can jump in here. It's been really interesting to compare the sentiment of like a lot of people on Twitter versus like a lot of investors. And it's not to say that one is right or wrong, but I think in the aftermath of stuff like Axie, DeFi Kingdoms, even more recently StepN, a lot of people are quite bearish on gaming. They see it as, lightly veiled Ponzi-nomics with no long-term value, et cetera, et cetera. And to be fair, I think that is, somewhat true. But on the flip side, I think you can't ignore just the amount of people, period, that these games, however poorly designed or well-designed they are, have been able to bring in a short, period of time, both in an absolute sense as well as in a comparative sense. So while I'm personally not particularly bullish on any existing games that have had popularity so far, I think going forward, I expect to see improvements in mechanism design, improvements in gameplay design, et cetera, across the board. I can't speak to any specific projects, but just across the board that will continue to bring like more users into the space. So go ahead.
Yeah. So like I kind of completely agree with you with where we currently are with GameFi and how things have matured over the past year with all the projects that came out. But I mean, I've been recently kind of looking at is it required for GameFi to create its own game? Like, does a project need to create a game from scratch and say this game is built on the blockchain and it's play to earn and whatnot, or is there more value in creating or like integrating blockchain dynamics and GameFi and play to earn mechanisms in existing games? I was listening to like some it was a random game that was being released on it was like E2 or whatever, like I forget the conference, but it's like a big game conference, whatever. And the developers were like explaining the game, and as they were explaining, I was like, wow, there's like a story behind this game. Like, people like to immerse themselves in these, like, I mean, even I did it too. I used to play Halo. I used to like I like to you immerse yourself and you get addicted to that game. So is there more value in taking those games that already exist and saying, okay, let's just plug in a play to earn, buy skins, buy your weapons, and live off of that? Or like what Bored Apes is doing, or what other projects are doing with or what Yuga Labs is doing, I guess, with other side, just creating that from scratch and trying to attract that value, because it seems kind of difficult to get both done from ground zero and then try to build a play to earn game that's also an insane story that people can really get into.
Yeah, that's a great question. And from my personal opinion, I think I don't know, I'm not going to say it's contrarian, but somewhat contrarian is I actually think that there's less value in appending blockchain-based dynamics to existing games, for the reason that I don't believe that there will be like any product market fit there, at least for the foreseeable future. What I mean by that is that even if in a literal sense, traditional gamers would be better off if they had these dynamics in their games, the sentiment of those gamers as it stands right now and for the foreseeable future is that they hate these dynamics, they hate NFTs, they hate crypto, they hate play to earn, they hate all of these things. And so that can be changed in the long run, and I think it will be changed. But I also think that there are enough people who have already shown a willingness to touch crypto, if you will, that if you can successfully build a game, and not necessarily a play to earn game, the tweet that's linked goes into a recent post by Mechanism Capital talking about, amongst other things, the difference between play first games and earn first games. And to sum it all up, there's a big difference between trying to design something purely for fun and trying to design something purely for earning potential or gambling potential. And both of those, in my opinion, can succeed in a crypto native sense. Like, I don't think any of us who've ever gone to a real life casino think that slots is a particularly fun design game, right? But, and I actually looked this up the other day, the annual revenue of slot machines in the United States is like 500 million plus, right? Annual recurring revenue. If there was a slot startup, it'd be a FANG stock. So, that's just kind of my outlook, is that there are enough crypto native players, speculators, gamblers, etc., to sort of build both play first and earn first games of a wide variety. I don't know if that answers your question.
No, I think that makes sense. And I guess I didn't think about it before. Also, like the transition of Web 2 game developers moving over to Web 3, right? Like there's also that. So like that can like really contribute to creating something that might be the perfect balance between a great story, immersive environment, and like earning and play to earn mechanisms.
I have a question for you, Kel, and then also Cole, if you want to hop in on this. But I'm curious, do you guys think it's possible to create a play and earn economy that's long-term sustainable? So, like a game that does allow players to own their assets and maybe like earn some in-game tokens or something. And like, if yeah, do you have any ideas about how that theoretically is created?
Yeah, in my personal opinion, I think yes. In terms of the incentive design necessary to create that, I honestly don't know. I'd probably be a billionaire if I did know, but I'm not. I do think that a lot of the existing dynamics that we see in these play to earn games, like I don't even know if they're really trying to make it that sustainable. just when you look at the balance of like, hey, we're giving people these inflationary tokens, they have no supply cap, and like these people are incentivized to sell, you know what I mean? And so inevitably that is going to kind of crash your economy if everyone wants to leave your economy. I think we've seen many such cases of this. But in the long run, I do think it's at least theoretically possible that someone could create a game with incentives such that my desire to exit the economy is less than my desire to stay in the economy. And that's what it's all about at the end of the day. You can't have a sustainable economy if 99% of the people in your economy want to leave the economy through the same very small door. It just won't work. And that's what we've seen so far. But as games get more fun, as the earning dynamics get more complex, I don't know which way it's going to go, but I do think it's possible in the long run to see that type of game exist.
Yeah, and I'll hop in there too. I'm in the same boat as Kel that, yeah, theoretically it is possible for a GameFi game to be successful. But I think what you have to do is you have to kind of break it into two parts where you take a game that might have NFT land and then you have the token on the other side of the equation. If the incentive structure isn't there for the token and there isn't some type of feedback loop, like Kel said, everybody's just trying to sell. Everybody's trying to get out. They're trying to get into the game, capture some value, and then get out while they're ahead. I think if you then look at the other side of structuring something like land for a game, then if it's not directly set up for the purpose of let me buy NFT and sell NFT to make money, if it's integrated correctly into a game, then it definitely can set up the potential for success. Kind of times going back to the token, most GameFi projects that we're researching, they don't have that feedback loop. So it is kind of like you only have the downward pressure of the price action. Full disclosure, a token that I'm invested in, a project I'm invested in, is Illuvium. And so something that's different for Illuvium than other games is their token, the ILV token, isn't like a play to earn mechanism. While there are going to be ways to acquire the token in game, whether it be through like tournaments in the arena or something like that, there isn't a let me put in 100 hours of work and do these quests and I get this many tokens back that I'm just going to go sell on the marketplace. So kind of taking it that route, then I think a game can be successful.
Do we have any decent examples currently? I know we kind of brushed over some of the games that are actually playable in the space. Do we have any good examples of teams that are pushing towards this? Maybe projects that we're looking at that haven't launched yet that have people excited, or just a general theory on what that feedback loop could look like from a token perspective that might keep a game up and running, as opposed to large groups coming in, extracting, and just burying a game's economy and then leaving.
Yeah, so kind of taking it back to Illuvium, their main game hasn't launched yet, but the arena aspect of it is currently in public beta and is expanding to more users on a monthly basis. Yeah, the way the project is set up is you have, like I said, it's not a play to earn the ILV token. You have a 2-token ecosystem where you have ILV and then you have SILV2, synthetic ILV. So you have the ILV token where it is used in the governance process of the protocol, but then it's also used for value accrual, because you have the way the project's set up is 100% of the revenue generated by the game is then used to buy back ILV from the market and redistribute it to people that are staking ILV. The other token on that same kind of equation is the synthetic token, which is then used in game. So if I stake my ILV, And then I have the option to, or once I stake my ILV, I then have the option to, do I want to earn more ILV and then kind of stack up kind of the strategy of receiving more revenue distributions, or do I want to receive SILV2, which then I can use as an in-game currency. And then once that in-game currency is used, the SILV2 is burned, and then an equivalent amount of that is not minted on the ILV side of the equation. So that's kind of where some confusion comes in with their tokenomics, because you have a max supply of 10 million ILV, but then you only have a total supply of 7 million ILV. And that difference of 3 million comes in to play because 30% of their token supply is allocated to those staking rewards. So kind of going back to the ability of a game being successful long-term, the focus isn't on users earning the token. It's based off of just let users play the game, let us capture alluvial, which are NFTs, and then that's kind of where the GameFi ability of let me go to the marketplace, let me flip my NFTs, let me buy, let me build a team and go to the arena to compete to earn ILV tokens there. I think a setup like that definitely sets them up for success in the long term, more so than something like StepN, where there is no feedback loop besides let me use my token to rebuild my shoes, but then what level of value comes after that? There really isn't one.
Cole, just a quick follow-up question, just because I think a lot of stuff in crypto tends to make people's brains melt, mine especially. Like trying to wrap my mind around this whole alluvium thing is sometimes difficult, and you know better than me. So would you say maybe a good analogy for this sort of like the games and the NFTs is I think most of us probably played Pokemon growing up, right? In Pokemon, you can grind for hours trying to get a shiny, which is just stats wise, it's pretty much the same as, whatever breed of Pokemon it is, but it has a different skin color. And that's sort of a way to signal, value and you've grinded and you want to show that to your friends and that sort of thing. So on the alluvium side, let's say there's a similar mechanic to make this sort of analogy. Is there maybe a shiny alluvium somebody could go capture, and then what the marketplace does is it allows somebody to go to a marketplace and give people the ability to choose between, do I want to say spend hours grinding trying to get this shiny, or do I just want to pay what is currently the fair market value for a shiny alluvial? Would that sort of make sense in terms of the value capture?
Yeah, 100%. I think for most people that aren't crypto native or people that are up to speed on the project, Pokemon is the example that I kind of default back to because it's just the easiest way to connect with most people. So I think if you take a step back on the game, you have really three different sections of the game. You have the overworld where you're running around and you're capturing the alluvials. And then you have the arena, to where then you have now collected your alluvials, you have your team, let me go do one-on-one battles against my friends, let me do, against random people. There's a subcategory in there where, you have a 1v computer mode. And then you have the alluvium land sale, which is the tweet that's linked in this space right now, where it's kind of then taking the way then I transition to that section is a Clash of Clans setup where you're playing a mobile game where you're building up your base. And then there's features in that where, if, they're called fuel, where you're going to need these different types of fuel that are generated on the NFT lands that are used in the main game. So bouncing back and forth between Clash of Clans and Pokemon is when you want to capture a Pokemon, you need a Pokeball. In alluvials, in alluvium, when you want to capture an alluvial, you're going to need a shard. Okay, well, how do you get the shard? Well, you're either going to go to the marketplace to buy your shards, or you're going to be a landowner who's harvesting resources that can then use those resources in the main game. So there's so many different aspects of value accrual. If you're a landowner, you're going to harvest these resources and you're going to sell them on the marketplace. If you're an overworld player, you're going to grind for the holographics and the legendaries and things like that nature, and you're going to go to the marketplace and sell them. And then if you got a stacked team and you just want to just compete against other people, you're in the arena, and hypothetically there's tournaments and things like that where you're then able to earn rewards once again.
Transitioning here, and we've kind of talked about what might make GameFi sustainable, and we'll go back to ownership, and I'll frame this with a game like Axie Infinity, where obviously there was a point in time where the tokens could be perceived as overvalued during summer, late fall. You had VCs, large guilds coming in and extracting value. And while individuals may have gotten value from that as well, we're going to pin a tweet here from Twitter CEO Jack, where he says that we don't own Web3. The VCs and their LPs do. It will never escape their incentives. It's ultimately a centralized entity with a different label. Know what you're getting into. So I've got a question for socrypt. We're all playing, all of us individuals that aren't getting or are getting VC funding. Do we actually own Web3? Do we own these items that we've minted or purchased? What are your thoughts? And I'll also put Bailaji's follow-up to Jack's tweet up as socrypt kicks us off.
Yeah. So, I mean, I think you definitely own the NFTs. Like, you definitely own, your ape or your punk. That's 100% yours. But I think the issue is, VCs, big money coming in, it's a necessary thing that needs to happen in the space. That's something that we need. But I mean, personally, it feels like the middleman is coming back into the space. I feel like we're seeing a lot of let's say like Web2 business models trying to shove themselves in to the quote unquote Web3 metaverse, glossy ecosystem / market. And I think I think that should be kind of, I don't know about concerning, but there should be some more like speculation or some discussion around that and see what exactly is going on and who these VCs are but not just VCs, who these people are that are behind the funding of these projects and what they have in mind, because they obviously obviously the projects that they're funded, that they're fundraising have a fiduciary responsibility to the people that have funded them. So there's a lot of discussion there, or there's a lot of weird things happening there that don't seem as like decentralized as one would assume. And so, yeah, I mean, I've been kind of like obsessed with this subject for like a past month or two, after listening to some investment banker talk about Web3, and yeah, I mean, if you look at current NFT marketplace or market cap, which is kind of difficult to gauge, but let's say the entire NFT GameFi Web3 crypto market cap is around 1%, between 1% and 2% of the total market cap, now since everything's kind of gone down. VC and private money owns around 30 to 50% of the GameFi NFT market cap, which is a pretty large chunk when I was looking at it. And I was just kind of surprised that like no one else has taken a look at this and seen how much money has really gone into the space. And I expect those people to want some sort of ROI on what they've invested in. So what sort of influence do they have over all these projects and where things go? And especially even going further than that, for let's say Yuga Labs wanting to create their own token and maybe even wanting to create their own chain, like maybe they have the money to do that. Like, what does that look like? Is that some sort of decentralized ledger that's been wrapped into some sort of weird Web 2 enterprise blockchain, or it's kind of a weird concept, I feel like. But yeah, that's sort of my whole skepticism around the matter, and then we can go into Balaj's response, which definitely makes sense, but I don't think it's the sort of antidote to what Jack was alluding to. So yeah.
I've got some questions for you here, Socrypt. I think leading off, do you think that the amount of VC dollars that are rolling around in the NFT Web3 GameFi space, has it turned it into something that's strictly speculative? Does the normal everyday person, are we just now playing the VC game, and you just kind of have to keep your head on a swivel to make sure that you don't get caught holding the bag at a specific time? And maybe a follow-up to that and kind of highlighting Yuga Labs. Is there a point of entry for VC money in a project's lifespan where maybe you feel a little bit more comfortable? Like Bored Ape Yacht Club, for instance, kind of did their own thing, and then they joined with Yuga, and now they're getting some VC money and backing to push their project forward. Is there a point where you feel safe, as opposed to immediately from launch, these devs are working with this VC group, you haven't had enough time to do research on the back end to see if they're reputable or not? Those would be my two questions to you, as far as what makes you comfortable and what doesn't.
Yeah. So yeah, for the first part, yeah, I'm definitely very, very, very uncomfortable with like the amount of tokens that the VCs have, and the unlock periods, especially in this sort of macro collapse / recession and inflation worries that are coming up, and all these headwinds. So that's definitely something that I'd be very, very concerned about if I was holding on to something. And would definitely, I mean, I feel like that's going to be like a huge theme for the next 6 months until the end of the year. Since most of these tokens are starting to unlock after a 6 month or 1 month or 1 year period. So that should be like number one priority if I was looking to get into a token specifically, right? I mean, if it's NFTs, it's a little bit different. And then being comfortable with sort of runway and the money that a project has raised. I mean, if I'm looking into, make good return on my investment in, on an NFT, I would definitely be much more comfortable with, Yuga Labs raising, I don't know how much they raised. It was like close to, I don't know, $250 billion or something, or $500 billion. So yeah, I mean, a project that has runway for months and years is way more attractive, obviously. But I mean, I'm just personally concerned in terms of where the project goes and how it develops. Like, that's the one thing that I'm worried about. Like, who is steering the way this project is going to move forward? Because that obviously dictates what else is going to be built on top of it. Or is going to be an open, decentralized platform where anybody can build whatever they want and it's theirs, or is the centralized entity, whether it's Yuga or whether it's whoever, is going to own that franchise and owns a piece of whatever is being built on their network or on their platform. And then, I mean, this is, it's a bit speculative, but how does competition in terms of, if Yuga's acquired a project, or if a project is being built on Yuga and they own a part of it, what does that mean for that project? Like, does it just get eclipsed by Basie and then that's it and it's gone? Because that's there's not a lot of there's a lot of like monopolization that could happen in that sort of scenario, which I'd be very concerned about. And like that's what we've been trying to avoid with crypto, right? Let's get rid of the middleman. Let's get rid of these huge like entities that could control our finances or whatever. And so yeah, it's I guess that aspect I'd be very wary of and concerned. I mean, I'm not saying that people won't make money off of it or whatever, but for me personally, it's an issue.
So for GameFi VC specifically, I mean that 30 to 50% of token holdings is an insanely high number, but I was reading that to make a AAA quality game, it takes like 2 to 3 years, and you have teams of 100 or 200 employees, and you need like a budget of tens of millions of dollars or even hundreds of millions of dollars. So is there a possibility, or do you see a way that like an alternative to this VC funding to get a quality of a game like that, like either through the community or just maybe a different fundraising method? Because from like the way I see it, it seems like VCs are kind of the only way to get the funds necessary to make a game that actually competes with the type of quality of games that we have out now.
Yeah. I didn't think about that. Like how much money and actually like labor and amount of smart people you need to create a really good game. So yeah, I mean, honestly, I don't think that there is a way without having VC money, but it's also like how the private money is willing to move forward with the project. I think that plays a huge role. So it depends on like who's investing in these projects and what they envision, because there's definitely private money that says we want this to be completely open to anybody, and anybody can build on it and whatnot. But or maybe the NFT and metaverse and sort of gamify ecosystem become their own thing, which is a little more centralized than the rest of crypto. Maybe it becomes an ecosystem that's just a little more dictated by centralized projects, which you could say kind of is already. So maybe there is a scenario where that happens, but no, like I really don't see where else they can get the money or the talent, unless the talent is willing to work for free and they're super idealistic about crypto and decentralization, and let's just move forward with the way it is and sort of work that way. But yeah, I mean, in terms of creating a game, you would definitely need a lot more funding than I realized. So yeah, definitely.
I'm going to hop in on this one because I think respectfully, I disagree with both of you on this topic. One of my favorite games of all time, and a game that I've spent probably too many hours of my life on, is Hollow Knight. And it's built by Team Cherry, which when the original game was built, I think it was only 3 or 4 developers. Like it was a relatively small team. And they put together, like in my opinion, one of the greatest games of all time. Like it's super fun to play. It has like a very immersive story. The lore is excellent. All these sorts of things. So while I understand the point that it takes a lot of money and a giant team to build, maybe something like Call of Duty Warzone, I do think it's possible for smaller teams without some significant VC funding to create like an immersive good game. In terms of funding, also I think that there are some other models. If we're kind of going to say that maybe it is possible to build with a smaller team, something that has happened in the Solana NFT ecosystem, which I've seen as like maybe a possible model for future projects, is there was an NFT project called Shadowy Supercoders, which originally nobody really knew what was kind of being built behind that. And so they made this NFT project and they kind of created their own little organic community. And then what came out was that owning the NFT gave whoever owned that all of those people essentially then had rights to the token of the actual project that the people behind the NFT were building, which is called Genesis Go, which is a decentralized RPC provider. And so like that to me is a really interesting model, and that they essentially, crowd raised from their community, and then they built, this small group of people who were like very interested in like the tech and these sorts of thing. And then instead of, giving like a VC firm or something like 50 or 60% of the token supply with whatever vesting schedule, they basically gave the option to anybody. Could have gone out on the open market and bought an NFT if they believed in it and wanted to have a token allocation. But everybody who was already a part of it, like they were essentially given a portion of it. And that for them, like actually contributed to overall decentralization of the project. Because I think when they announced the token release, there was something like 4,000-ish unique holders. So, and it was like 80% of the token supply, something I believe was in this sort of initial allocation to NFT holders. So that like naturally helped solve some of this decentralization issue that you guys are bringing up, that, like VCs and like these people who have institutional money create for crypto projects. Is this like a cure all for everything? No, I don't think so. Like, but I do think that there are options. And I think we're also kind of in this area where we don't know what we don't know. And as, people like us are continuing to recognize like, hey, this is a problem, and gets away from the sort of decentralization ethos of crypto, people will try to iterate and think about this problem. Like, how do we solve this? And to me, I just think that this is maybe one example that could work.
Yeah. I mean, I agree with the crowdfunding aspect, and like definitely that there have been games that were just like it was 5 dudes in a garage and they made an amazing game. I mean, like you look at Counter-Strike, like that's such a like low lift game, and but again, like those games are once in a lifetime like hits, like you won't really like, not you won't, but it's super difficult to try to get that. Especially nowadays where, like kids play games where the graphics are insane. Like at least I didn't have that, you know what I mean? So the expectation is way higher, I feel like. So it's like a little more difficult for that to happen, but it can happen. And like, obviously if it does, that's awesome. For the entire, I guess, ecosystem or whatever. And I think that's what a lot of crypto games are trying to do. Like, retro 16 pixel, these sort of low lift games. Because obviously the funding's not there and whatnot. But yeah, I totally agree that there's definitely other avenues for funding and moving forward with creating projects and games that don't have to be like Call of Duty or like a Halo Infinite or whatever.
Perfect. All right. Closing question here on Andrew's final piece. Are there any other options, whether it's the initial sale of a token or a project's token, that you think can help it move towards decentralization, or after the fact, if it's becoming too decentralized, maybe it's community governance, something along those lines that could protect that ecosystem from getting absorbed by VC money?
Yeah. I mean, that's definitely probably the not, I want to say only method, but like the standard crypto method in terms of how to decentralize strategies and whatnot. But I don't see us having that yet. Even with Yuga's ApeCoin, they still have a 5-person committee that's obviously voted in by community members, but it's a committee of founders from big tech companies or Yuga Labs themselves, or individuals that have contributed to the development of Yuga or of their products, or private money that came in, and the founders of those companies are involved. I'm not saying that they shouldn't be involved, but they still have, I don't know if it's over 20-30% or whatever the number is, but there's still that sort of central entity that could be leading things, and the way the project develops. And obviously that's not what they want, obviously, but maybe things tend to go that way as they develop. So who knows? But definitely, trying to pinpoint and figure out how a DAO could work efficiently to run a company or even a gaming company at that, is something that's obviously hasn't been figured out yet, but would be a great solution to the issue.
Well, that puts us right at about the hour mark. I wanted to say thank you to Cole, Justin Baba, Andrew, Jeff Pesos, the other Justin, socrypt, and Kel. Thank you guys for coming up today and speaking about GameFi, PFPs, Web3. You can catch us the 22nd from 4 to 5 p.m. Eastern, and we'll see you then. Keep an eye out for reminders on our Twitter page. Thanks, everybody.